Time for today's three-stock lunch, and with our trades today is Gina Sanchez, Chief Market Strategist at Lido Advisors and a CNBC contributor. First up today is Johnson & Johnson. Shares are up fractionally on news coming out of that ASCO conference. The CEO, Joaquin Duato, expressed that J&J's goal is to become the oncology leader. What's your trade here, Gina?
We own J&J, and this is one that we are actually still very positive on. The big overhang for J&J continues to be both the talcum, the lawsuits that involve talcum and asbestos. And what we see is that the price is largely priced this in our view, and there's a tremendous amount of potential growth. And, never mind that you're getting continued dividend growth out of this stock. They handily beat expectations. And so J&J is doing what it set out to do, and it is establishing itself in other growth areas, like its acquisition of Shockwave, which happened. And, that is a huge market in terms of being able to go in and take out, arterial plaques that are to avoid cardiac disease. That's a big market. They have another expansion into atopic dermatitis through their acquisition of Yellow Jersey Therapeutics. So that is all very positive. So we think that the pipeline is very, very robust, and the risk is priced in.
All right. Echoes of Michael Farr there with J&J. Let's move on to Costco. Another all-time high after a number of bullish analyst notes from Wall Street. B of A boosting its price target to $874, reiterating buy. Loop Capital, we spoke with Laura last hour, hiking her price target to $890. You agree with Costco? Just stick with it?
We do. We own this one as well. This one has been a fantastic holding for our portfolios. It has gone really, really strong, and I think an interesting canary in the coal mine is that they opted not to increase their subscription prices because of concerns about a pullback in consumption going into the latter half of the year. Now, what's interesting about that is I think that that's very, very bad for the entire industry in general, but Costco is one of those names that benefits when people look to save money. So I do think even if they might be seen as a tad overvalued at this place, I do actually think they can defend if the market goes into a prolonged downturn. So if it's a mild downturn, it's actually still great news for Costco. So all in all, good news or bad news, this is a stock that can play both sides of that.
All right, let's go to Spotify. We've just been talking about it a little bit. Shares jumping around 4%. As we discussed earlier, the streaming company says it's going to raise prices of its premium subscription plans following a similar price hike last July. How about Spotify at $309?
So this is an interesting one. I think the market is very enthusiastic about their goal of becoming profitable. So they're showing profitability. The question is, can they sustain that profitability? The bigger challenge that I have is that the business model itself is very challenging. Spotify is competing against other much larger entities for whom music sales is only a component of a much more diverse portfolio, like Apple and Amazon. And so their growth is somewhat limited. It's capped at what they're competing against. Meanwhile, the cost to actually pay out royalties, that just seems to be an immovable floor. And so I think that it is basically making money between the wallpaper and the wall. This is not one that we're that enthusiastic about. It's a sell, in my opinion, even though it is doing very well and they are getting towards profitability. It's just a question of whether or not they can maintain it.
Very interesting. All right, Gina, thanks very much. Gina Sanchez for us today.